Hello guys, welcome back to the Money Machine Millennial with your boy Weekender. I hope that everybody having a great weekend so far. Enjoy it and stay safe. And then we got some great stuff coming. So hit the subscribe button and then to stay connected because you don't want to miss out. Some of our subscribers and followers on all the platform, IG, TikTok, and the others, so they requested for me to have my caption in French for my French speaking country friends or followers. Let me just say family because you guys are family. Alright, well, definitely it's gonna be a challenge for me. Let's see, I'll try my best and then hopefully everything's turned out great and then let's go and have some fun because we are here to grow, we are here to learn, and then we are here to accomplish some great stuff. So today I'm going to talk about type of investment. So there's multiple type of investment that you guys can do and then to bring in some money. um, I'm basically going to touch base on every single one of them, even though I'll probably not go too deep, but I'll give you a summary of every single one. And I will be making some other videos to talk about them specifically. And then if you guys want me to talk about one of your favorite first, feel free to drop it in the comment section below and then I'll gladly jump on that first because I'm here to actually help you guys and then to go and learn together, yeah, and have some fun too. All right, first of all, so the most common one is stock. Right, stocks is it's like you have some share into a specific companies. Some people also call it equity, and then some people call it like ownership. So it's like you buy a ownership into a publicly traded company, right? And then you will consider that move like a bullish action because you are hoping for that stock to go up, because if you invested into companies like your own business, you want your business to grow, right? So basically that's why it's a bullish action, because definitely the goal is for that stock to go up. But if the stock goes down, there's a couple ways that you can actually lose some money because there's risk also involved. The stock can goes down. You'll just have, like, some people will just wait it out. They'll just wait for the market to come back up to the average price so they could get out. You can also lose the money somehow if this company goes bankrupt, or also if you delisted from NASDAQ or the New York Stock Exchange, it's probably harder for them to go back up. But there's risk and everything. There's risk and reward. But yeah, that's basically the stock. The second one I'll talk about is option. It's like an advanced investment technique. The option, you can buy, you can sell this asset, but it's all done within a specific time frame, right? Because if the option doesn't goes in your predicted direction during that time frame, most likely you probably lose that money. And then some people call it out of the money. But if you actually break even, it will be at the money. But if it goes in your direction, it's in your money. So basically during that time frame, some people call it as expired. They say the option is expired, or some people say it's exercised. But the only difference, if you sell the option, you have an unlimited loss. But the gain is only the premium that you pay. Stay tuned. We will talk more in detail about option in the future. Because there's two types. It's either you buy a call or buy a put, or you sell a call or you sell a put. So basically, the call is just like you open the price action to go up, and then the put is just like you basically want it to go down. The other one is cryptocurrency. A lot of people asking, what's cryptocurrency? Well, some people will say uh, it's the currency of the future because it's fairly the newest type of investment. Some people call it like digital currency. Um, some people, I don't know, some people call it scam. Well, it's up to you. It's based on your belief somehow. But the fact that you can look at it as like, okay, back in the days when people used to trade, right? They used to trade with chicken, goat. Let's say that I go to the market, I want to get some clothes, or I want to buy a sword, I want to buy a horse, or any other thing. If I have like one chicken, two chicken, I traded it for that, for whatever I need, right? But then gold and silver came. People didn't believe it. They was like, okay, why is this? It's just like a hard piece of metal. Then nobody believe in it. But guess what? Then again, it becomes like the currency, it gains value. Then paper money come. It's like it's just a piece of paper, but mind you, it's just a currency. So the basically you put the value in it. Then credit card come, people didn't believe it, debit card, whatever, and then until it gains value. So basically, that's the currency of the future. Let's look into it. Be ahead of the herd because you don't want to miss out. Because hey, you don't know. Just like people thinking about flying cars, basically cryptocurrency probably the future. So yeah, you got to look into it. But the thing that basically based on Google, the estimate crypto ownership is like less than 10%. But probably by now, it probably more than that because a lot of people hearing and talking about, especially that shoot up that Dogecoin made, but we all know about that. So yeah, there's a lot of multiple coins, and then yeah, definitely we let's just put that aside. We'll talk more about that. And the fourth one I'm touching, I think, yeah. So it's Forex. Forex is the foreign exchange market, which is a global decentralized or over-the-counter market for trading currency. It's just like when you travel to a country, instead of going, let's say, to the bank or to somebody to actually trade your US dollar. Let's say if you go to Canada, traded that money to the Canadian dollar. You just do it in your phone or at your own comfort, at your house, anywhere you go. And then the good thing about Forex is just like it offers you the opportunity to also trade the stocks. It also offered you to trade option and crypto. So it's just like an all-in-one platform. But basically, if you guys interested about Forex, I definitely suggest you guys to go to IG and follow BFM Financial LLC page. They'll actually be gladly to cover you, and then I'm pretty sure you guys are in the best hand. That's my recommendation. And then also the thing actually, Forex also is based on leverage. So basically you can use a small amount of money to make a huge return because they actually traded about $5.6 trillion on the Forex market daily. Imagine guys, $5.6 trillion. So that's a huge pie. There's enough for everybody to grab a piece of it. Yeah, so it's just like the leverage, but just like an ETF, or basically, yeah, there's ETF. So yeah, let's talk about ETF. So ETF is exchange traded fund, and they are like one type. Somehow it's an all-in-one type of trading as well, but it's for like basically stocks. So let's say that you want to involve into electric vehicle. Instead of looking at every single electric vehicle that you probably don't even know that exists, you rather just go and look for the ETF that basically focus on all the electric vehicle, and then you can choose to purchase that ETF instead of purchase every single one at once, unless if you want to diversify your portfolio. So yeah, but the ETF, you have like the ETF, you have the inverse ETF. The inverse ETF is like it's moved the same way as the ETF but on the opposite side. And then you got the leverage ETF. Let's say that you the leverage ETF actually track the market tick by tick, but the only difference, it goes on a multiple basis. Let's say that you have a 1, 2, 3 leverage ETF. It's like for every dollar you make, they give you $3. And then the same thing too for the inverse leverage ETF. Every dollar you make is just like $3, but you just go on the opposite side. So basically, if the regular ETF goes up by 3 points, the inverse leverage ETF goes down by 3 points, because its leverage is just like a ratio from 1 to 3. Some people actually even refer to it as like a collection investment. Basically, just like a mutual fund. Right? Yeah, just like a mutual fund. And then guess what? Let's talk about mutual fund. I think that's our sixth one. So mutual fund is like investing broadly in a number of security, like commodity, equity, currency, derivative. And then like the mutual fund can either passively or actively manage. So basically, what's that mean? Some people, I know, you're probably wondering what's actively managed or what's passively managed. But guess what? We are here to learn. I got you. Passively managed, they refer to it as like a index fund, most likely. The passively managed, just like a major stock market index. For example, we can take the US 30. Some people call it also the Dow Jones. The US 30 is like it represents the 30 biggest company in the United States. Can you imagine? It's just like you're trading the best 30 market in the US at just one. You just have like a ego eyes focus on one specific thing, and then you traded it. So that's basically, as some people refer to it, as passive. And then the actively managed mutual fund is basically they have like a fund manager who picks security in which to invest. So for example, you just have that money somewhere, somebody's basically managing that money for you. But it's just like the IRA, that is something that you don't have control over, right? But guess what? We're going to talk about IRA next. All right, retirement plan, basically. It's just the most common way for a company to write off tax. You guys probably wondering, right? So they actually pay less tax by using the retirement plan. Like they actually put money aside for you. Those are sponsored by your workplace, like 401k and 403b plans. You can also get individual retirement plan, which is before tax. Let's say the before tax, whenever you withdraw the money, you pay the tax at the end. And then you also have the Roth IRA, which is after tax. Basically, they actually tax you ahead, and then whenever you withdraw in it, you can get tax free. Mind you, the retirement is not really categorized as an investment per se, but a way that let you purchase bond, stock, fund, but the only thing is that the risk is the same as just like you investing that money yourself. So keep that in mind. I know it is. So I know it is a type of retirement saving plan, right? It's just somewhat the IRA, but it's a bit different. Basically, it's an agreement from you and an insurance company. When you buy when you buy an annuity, you basically buy some type of insurance policy, which you get a specific amount of money in a specific amount of time. You can either get it periodically, or you can either get like a lump sum. However, annuity are fairly risky because they're like lower risk, because just like a type of contract that you get into. But the risk is lower, the reward is also low, because the money that you're getting back, it won't be that much, because the annuity, your annuity account would not go as you expected it, as you want, because we all want money, right? uh, so they categorize as fixed annuity or variable annuity. They can also last basically for lifetime, because some people take lifetime annuity, and then some people take short-term annuity. Basically, the lifetime annuity stays basically for a lifetime until you die. And then the next one is commodities. They are like physical product that you can choose to invest in, such as energy. You got crude oil, you got petroleum, you got natural gas, and then you also got agriculture, livestock, and meat. You got metal, gold, silver, and some people use it as like an inflation hedge, because commodities like gold and silver, they perform better during inflationary period. Let's say there's an inflation, you can make more money with that commodity. One downside to commodity is like they do not covered by CPIC. CPIC is the Security Investment Investor Protection Corporation. Basically, that cover you in case something happened to your brokerage account. And then the next thing we're going to talk about is certificate of deposit, which some people refer to as CD. This type of investment are very low risk. Reason why, just think of as it as your saving account. The only difference is that like you come to an agreement with the bank that you give them, or let's say you borrow them a specific amount of money. Then they will give you a predetermined amount of money, which they can refer to as, which also you can call as interest. So basically, they'll give you that amount of money at a specific amount of time, a specific time, and then whenever that time is over, they will give you back your principal. But the longer the contract is, the more money you make, because the interest is higher. And then the good thing about CD is like they covered by FDIC, which is insured up to 250K, right? But the downside is that there's major penalty if you withdraw that money early. And the last one I think we're going to touch base on today is bonds. Bonds are like debt security. It's like you're lending money to either an entity at lower risk for a lower reward, until basically it's become to maturity. Basically, that money that you lend to the business, or the government, because the government use that as a way to create debt, because the government issue municipal bond as the companies issue corporate bonds. There are ways, let's say that the government want to bring the market up, right? They'll have to find a way for them to make something out of the market. For example, the U.S. Treasury issue Treasury bill, which have a maturity up to 1 year or less, basically, yeah, up to 1 year. And Treasury note is from 2 to 10 years, and Treasury bond have maturity or 10 year plus. So basically, I think we cover like 11 type of investment today, which is stocks. Which is stocks. We got option. We got crypto, forex, ETF, mutual funds, retirement plans, annuities, commodities, certificate of deposit, which is CD, bonds. Yeah, I think that's about it. So, like I said, guys, if you guys want me to talk about one of these type of investments specifically, first, feel free to drop it in the comment section, and then I'll be gladly to actually touch base on it. I'd be gladly to do some more research and then goes in depth with it, because we are here to go together. And then, like I said, it's your boys the weekend. Enjoy your weekend, and then stay tuned. Hit the subscribe button, the like button, and then let's go and learn together. Stay tuned. Bye. I'll see you guys in the next video. Bye bye.